Welcome to another Rooster Talk, where we get an update from the mining executives who've had our conversations previously. This is our 2021 Sydney Rooster Talk series. Today I've got Scott Williamson here with me from Blackstone Minerals. They've got a nickel project in Vietnam, as most viewers would know. And Scott, give us an update. Tell us what's been happening.
Yeah, thanks, Noel. It's great to be back in Sydney for an in-person conference for a change, which is good. So Vietnam, it's all going well. So 12 drill rigs operating at the moment, just drilling out those 5 different ore bodies. We've got the Ban Phuc disseminated, still infill drilling on our large ore body there. Ban Chang, which is one of our massive sulphide opportunities. King Snake, we've got this Taipan discovery zone, which looks really interesting over at Ta Khoa. We've also got the Ban Khoa disseminated. So yeah, a lot of drilling going on, and we'll update with some assays soon. And a lot of study work as well. So we're well into our pre-feasibility study for the downstream refining business. So that's the expanded refining strategy, which we've announced recently. So we're looking at four times uplift on the scoping study numbers. So it's a significant refining business we're looking to put into the market in June, July in the pre-feasibility study.
Okay. I mean, obviously, Blackstone's evolved from, just trying to get a resource and go down the mining, and now it's downstream. It's interesting, even when recently I put out our first coffee of Samso out, must be going almost 2 years now. And we even touched on the fact that there's a possibility that you might go from Ta Khoa down to looking at downstream stuff, and now you're actually physically talking about it. What's the market saying out there now? Is this still going to be sort of the place to be in for likes of yourself?
Yeah, so it's interesting. So it was actually 2 years today at this conference that we announced the acquisition of the nickel sulphide opportunity in Vietnam, and it's been a big 2 years. I think we've done something like 50,000 metres of drilling. But we always wanted to push into the downstream, and one of the reasons was there's actually a tariff on the concentrate out of Vietnam. So the government is incentivising downstream processing. So we've always had that push, but it was also those partners that are in Korea saying we need those downstream products. So they want to get into the upstream, but they don't want to sort of take it on too much. They want to be a part of that sort of blend of downstream and upstream sort of opportunity, which we have in Vietnam. So yeah, we think it's exactly where you want to be. Particularly as a junior, you want to be able to capture that uplift that comes in that downstream business. So and being able to do that, you need to partner with other major players like EcoPro and the Korean battery and users. So you don't want to be doing this on your own, but you do want to be able to have exposure to the uplift and the value creation that comes from that downstream business. So yeah, we think it's exactly where you want to be. It opens up a completely different investor base as well. There's a lot of investors that like mining, but there's a lot of investors that like industrial companies, and this is becoming more of an industrial.
One of the things that, one of the aspects of this whole, everyone sort of, there's an effort by a lot of companies now going down this downstream thing. And I heard one comment that, yes, we're all going downstream, and I asked the question, so is the source of the products going to be an important part of your strategy? And the answer back was that we can now source from many people. Whereas when you guys announced that you're going down there, it's so more in tune for me, because I knew your nickel was there. It's good. It's next door it's in your project area, right? So I could say, okay, well, these guys can get the products in here, and he can source other products from other places as well, at the same time. But he's already got his own. How important is that in the whole downstream story?
That's a really good question. So the security of supply is the issue here, and we wouldn't be able to build these relationships with the downstream partners without that nickel in the ground. So because we have a nickel sulphide district and it could be a world-class nickel sulphide district, that's why we've been able to build these strong relationships. So without the nickel in the ground, then you're nowhere. And so we've been able to build those strong relationships because we offer a security of supply strategy for our downstream partners. So it's so important, and without that security of supply, there is no downstream business, and so then you become, without the mine associated with our strategy, then you'd become just more of just one of the other sort of tech plays in the industry, and we're not that. We're still miners at heart, and we're always looking for opportunities to seek more security of supply for our partners.
Yeah, I mean that's one of, as you said before, I love that comment. Good geology brings good surprises, upside, etc. When we started this conversation, you said, we got this, and I think you mentioned before in the conversation that you scaled down to 12 rigs. I mean, most companies it's scaled up to 12 rigs, right? What number did you scale down from?
Yeah, so we're at 13 a few weeks ago when we were doing a bit of drilling on that Bamfoot disseminated. That drill out phase is coming to an end, so we dropped one rig away. But we'll sort of scale up and down depending on how many targets we have at any given time. So we'll sort of sit around this dozen drill rigs sort of for a while now. So yeah, we scaled down from 13, so not a big scale down, but yeah, and that's it sort of gives us a great flexibility. We've got a number of different types of rigs. We can drill deeper. We've got a lot of flexibility in the way we drill out these ore bodies, and so that and very cheaply. So $50 a metre to drill all in. That's geos, assays, everything. So in Australia that would be $250. So yeah, it's significantly more competitive pricing.
I mean, as we mentioned about how where you just talked about how important it is to have security of your product, and that's where you're able to attract partners. I think one of the other issues, not issues, but one of the other good points is the as some people say, it's the low cost or the potential low cost of doing this, as opposed to if you were in a high cost environment like maybe Australia or something like that. So when you guys are talking to, is that a big factor, that low costing? I mean, so the security of your source is I guess we've covered that, but I'm just thinking, do you guys talk about how that just because where you are, your cost is going to be significantly lower or marginally lower?
So for a downstream nickel business, the key components of the costing are the labour costs and the power costs, and so that's why we believe that Vietnam is one of the best places in the world to be doing downstream nickel processing for the lithium-ion battery. So our labour costs are half of China. So the manufacturing industry are pulling their factories out of China and they're putting them in Vietnam because it's a more competitive labour market. And the power cost is 7 cents per kilowatt hour. In Australia, that'd be 2 or 3 times that. So we're very competitive on the power, and it's green power, and that's the key, is the hydro renewable power, and that's what's driving very low operating costs, but also that flows into your capital as well, so much lower upfront capital requirements.
I guess that this business takes a while for you to get it to move and develop. Going forward now, I mean, news flow, because all investors want news flow yesterday, and I love a quote by Michael Bohm says now a quarterly report is a long-term plan, strategy, So what's the news flow for guys coming in for the next 12, 18 months?
Yeah, so it's a big year for us. So the first one will be the pre-feasibility study on the downstream, which is in June, July. That will show some significant numbers because we're increasing the size of the refining business. So the scoping study, we looked at 1 downstream train, and we're now looking at 4 trains, and we'll supplement feed from our third-party partners. So that's a key milestone, June, July, and then from that we kick off the definitive feasibility study phase and the piloting. So there'll be a lot of announcements around piloting, the starting of the definitive feasibility study, but all through this there'll be drilling updates regularly as well. So we've got those 5 ore bodies. We're about to drill a new ore body as well at the moment. So there's always ongoing exploration, and then it's the study phases which we'll show the value creation of what we've been drilling. So it's it's a big phase of studies, but also key milestones will be corporate, I suppose, activity around our partners, both on the feedstock partners, but also on the downstream partners. So there's a real partnership model that we're playing out here. We will bring in feedstock partners, so third-party nickel mining companies that will partner with us. Then we'll also look at the downstream partners and bringing those in over the next 12 months as well.
Okay. I guess, as you move forward, it gets into another realm of terminologies and things like that. But one of the terms that I really struggled with previously, trying to figure out what you mean by train. Maybe just give a quick, basic 101.
Yeah. So a train is I suppose it's a part of that refining business, and it's broken up into units of throughput, basically. So one train is 1 unit of throughput, and for us, one train is 200,000 tonnes per annum of nickel concentrate. So it's just 4 trains of that particular unit. So it's just a way of breaking up a refining business into different streams, I suppose. And each of those trains can have different partners as well. So we might have 1 train for EcoPro, we might have 2 trains for another partner, and then so we can make those trains fit the customer's needs. So we can tailor the products from each of those trains, because there is the changing chemistry. So we're moving towards an 811, but some partners might want a 622, which is the nickel cobalt manganese ratio. So we can change a train slightly for each customer's requirement. So yeah, that's what a train is. But it's just a term used in refining for sort of segregating the business unit.
So it's not a choo-choo train.
No, not a choo-choo train.
All right, look, Scott, thanks for the update. Anything else you want to tell your...
Today, one of the big things that's happening with this event is we're starting to promote our spin-out of Codres Minerals. So we've announced yesterday the MD, Shannon Bamforth, he's come from Samso, so a great appointment there as our Managing Director of Codres. We'll be IPOing that soon. It's the prospectus will be lodged in the coming days, and so look out for the Codres Minerals IPO, which is the spin out of our non-core gold assets.
Okay, that's CODRES.
Codres, and the ticker will be CDR.
Okay, well there you go. As I always try and say, guys, reach out to Scott. Any questions? Find out what the train means. But look, we're at the RIU here, so we'll be down there talking to people, and hopefully I can get this out soon. But again, thanks, Scott, and thanks for the update.
No worries. Thanks, Noel.
All right.